They're cautious after stocks stumbled and investors turned to safe haven assets in the previous trading session.
The number that we paid is by all means very high. However, the margin with which we got the rights is really slender.
Today there's a good chance that the shorts get trapped because they will not get follow through, and in that case there might be a big rally. In fact, today could be a big day for individual mid-caps as well.
Reliance Home Finance could be valued anywhere between 5 to 5,500 crores, 5 to 5,500 crores, which means if you have to do per share price, it could be between 100 to 120 rupees per share.
We stand ready to do outperform. India has a long tradition of part of the fellow developing country while pursuing our own aspirations for growth.
Mix is anyways changing in favor of retail, so that remains one of our top picks within the private banking space.
As of now, you'll have to say that the start is fairly in line with what the SGX Nifty and the pre-open indicated, 18-point higher.
Let me confirm to you that there is nothing strategically significant which has led to this particular decline. It is normal market forces.
Crude oil prices are also stable, slightly on the upside. So because of the better cracks, we do expect second quarter to be better than the first quarter as far as the net GRMs are concerned.
After the infusion of funds, the net worth would go to close to around 1,500 crores.
We need to do it from the point of view of how to unlock shareholder values, how to get further cash into the setup to do further projects as we look forward to.
Market is up about 15 odd points, 9,927. Okay, we're up 40 points now, which means the Nifty is at the day's highest point. That was the day so far. Hello and welcome to a new edition of Closing Bell. I am Prashant Nair and with me is Ekta Batra. Ekta, good afternoon.
Hi Prashant. Well, it's turning out to be actually a good stable session for us. Yeah, we're going to wait for the US markets to open and let's see what that delivers. But nonetheless, as of now, we have the European markets which are quite steady, up around 0.5% to 1% on an average. So no real jitters which are coming in from the geopolitical space, from the global space. And things seem quite stable, but still some way to go for 10,000.
Oh, absolutely. I think before 10,000, Ekta, the level to mark out will be yesterday's high, which is 9,988. I mean, that is the first port of call in a way, which is about, what, 30, 35 odd points from where the Nifty is at this point in time. So, I mean, the market last Friday basically took out the rebound high of the big correction of 450 points. And yesterday we made a newer high, 9,988. Day before yesterday. Yesterday, of course, I mean, the market cracked the way it did. So, I mean, 9988 is the first sort of important level to watch. As of now, you've got commodities, metals, energy, public sector enterprises. I mean, these are sectors which are leading. Private banks and a couple of NBFCs aren't doing as badly as well. There are gains there. So that's basically the pack which is kind of holding up the market at this point in time. But it's a good way to start this edition of Closing Bell at the day's highest point. But by the way, I can tell you that brokerage offices have kind of thinned out quite a bit. People have been, I guess, running home to avoid the resurgent traffic.
Yes, and I think that's the best time to actually go out because there's actually no traffic on the roads. But nonetheless, more of that in a bit. And those are the Sharda Motor numbers which are on your screen. It's a profit growth of around 47% and a revenue growth of around 15%. Stock is reacting positively to it, up around 3.5%. But these are the top stories we're tracking this afternoon. Steady gains on the last three. The Sensex and the Nifty trade at the day's high. The mid-caps outperform with the index rising almost 1% today. Reliance Capital stock adjusts post the demerger of the home finance arm. Management of home finance business pegs post-infusion net worth at 1,500 crores, expects return on assets to be upwards of 1.6% by FY20. In his first interview after taking over as MD and CEO of L&T, S.N. Subramaniam remains confident of meeting the order inflow margin guidance for FY18, expects Q3 and Q4 to see the bulk of order inflows, adds that divestment of non-core assets is on track. And the all-important bilateral meeting between Prime Minister Modi and Chinese President Xi Jinping concludes. Indian Foreign Secretary says discussions between the two leaders were constructive. Peace on the Indo-China border area was also discussed.
Okay, it's 50 points now on the Nifty. We are inching sort of closer and closer to that level of 9988, 9960, 9961 is where we are. And sharp surge. I mean, I think it's all happened in the last an hour and a half or so. The bulk of this sharp move, one-way upward move that we are seeing, and it's continuing. How should you sort of position yourself in the last 1 hour of trade? Ashwini Gujral and Mitesh Thakkar are joining in with some closing strategies. Gentlemen, good afternoon. Ashwini, first of all, what do you make of this surge we are seeing? Actually, by the way, you mentioned that at 1:30 that we may see a bit of an up move. We are seeing that. What would you do?
The problem is that I think global markets are kind of getting to the view that war is not imminent, and hence Europe is moving higher, and shorts here are getting covered. But these things kind of change on a dime. So for the moment, 9900 stop remains valid, and you should, for the last hour, get long on Nifty as well as Bank Nifty, because it's clear that at lower levels buying was visible. Plus you should have short covering. So having said that, whether you want to carry positions or not, that you need to assess, on whether you can take a 100-point gap down tomorrow morning. So basically, we are consolidating, slowly pushing on the upside, and with the caveat that if there is no other negative news, we could still continue this rally. On stock specific, Coal India is a buy with a stop of 245, target of 262. GSFC is a buy with a stop of 140, target of 152. And Century Textile is a buy with a stop of 1265, target of 1310.
Okay, well, we have a couple of other numbers. Aegis Logistics, where the profit is actually looking quite good. So we had Sharda Motors, where the profit was up 47%, and Aegis Logistics also should come up for you in terms of the numbers. Not looking too bad for that one either, spiking up on the back of that incremental news that we're seeing. Mitesh, over to you then. Afternoon, what is your index as well as stock-specific strategy?
Yeah, afternoon. So I think the index view is still, I'm not a beat. I think I'm waiting for this 99.65, 99.80 kind of zone to be taken out, and maybe that will be a fresh breakout. And if we see some follow through and momentum, I think then we might have strength to sustain beyond the 5-digit mark. For the time being, we're trading with stock-specific bias, which mostly has been on the wrong side. I have a common stock overlapping with Ashwini, that's Coal India. Would buy with a stop at 245 for targets of 265. And Titan is a buy as well. Keep a stop at 624 for targets of 670, 675.
Okay, so the market is now steadying with about a 50-odd point gain. Those are closing strategies from both our experts, Ashwini and Mitesh. I just want to quickly highlight if anything has moved in terms of index contribution. If you can have that plate up, it will very quickly tell you what is contributing how much. So Reliance Industries is contributing about 8 index points. Maruti is contributing about 5. HDFC about 4. And you have HDFC Bank about 4 points, Kotak Bank about 3 odd points or so. So you basically have about 25 odd points coming in from 5 or 6 odd stocks. I mean, that usually is the case, but there you have it. On the other side, you've got Bharti, which is still taking away, but I think Bharti is off the lows. We of course will discuss telecom stocks in greater detail in a bit from now. But it's time now, Ekta, for our segment, Stock 360. Yes, absolutely. Well, for today, we are analyzing Reliance Capital. We have Varinder to take us through what the business means post the home finance demerger and what the prospects look like.
Well, honestly, today was the day we were waiting for to see how much value these subsidiaries have, because for the longest of the times, Reliance as a group, or Capital as a group, has been talking about value in the subsidiaries. So the ex-adjusted price for Reliance Home Finance, if you have to see from the pre-market, was around 130 rupees. That was higher than what we were expecting. The market cap of Reliance Home Finance at that price comes around 6,500 crores. Most of the analysts on the street were expecting it could be nearly 5,000 crores. With the net worth of nearly 1,500 crores. So home finance companies are trading around 3 to 4 times multiple. So 6,500 crores means over 4 times value what Reliance Home Finance has got today. Now, what it does in the simplest of the manner is that it increases the SOTP price for Reliance Capital by a small margin. Important is that, if you have to value now, because they are left with 51% stake in Reliance Home Finance business, the SOTP comes around 30,000 crore, you minus the debt, which is nearly 25,000 crores. The market cap is nearly 20,000 crores right now. So there is a small room for the upside still now in Reliance Capital. And that is why we saw recovery happening in when the stock listed in the morning. Now the important is everyone is watching out for the AMC IPO, because that's a big one coming from from Reliance Capital. The AMC is the cash cow for Reliance Capital clearly, and that value what market gives, that will be very important to watch out for, and we'll keep an eye on that. But also I want to mention that apart from Reliance Capital, because Reliance Home Finance in the morning got a value of nearly 4 times price to book, there are other companies like Dewan Housing that is buzzing. Dewan Housing actually is the cheapest in the home finance space, okay, because of a lot of issues in the the past issues which are there with the company. It is still trading around 1.7 times price to book value. So now investors are looking out for ideas which are not expensive in the space, which is growing at 25-30% CAGR, and which is cheap compared to all others. So if Reliance Home Finance is getting 4 times, Dewan Housing at 1.7 times looks good. But of course, we are waiting for that BKC land deal, which everyone is talking about on Dewan Housing, whether it comes or not. If it happens, then it will be a big trigger.
Okay, I mean, there are implications for Reliance Capital, and there are implications for other home finance companies, of course, as well. But let's get in some perspective on this. I mean, SP Tulsian of sptulsian.com is with us. Sanjeev Bhasin of IIFL is joining in on the show as well. Gentlemen, thanks very much. Good to have both of you here. Mr. Tulsian, first of all, is the market valuing Reliance Home Finance too aggressively? I mean, is there something we can learn from the recent listing of AB Capital? I mean, now that we have evidence of 2 or 3 days of trading there, it does seem that there was too much optimism with around AB Capital and what it could trade at. I mean, are there any lessons we can draw from there for what market is assigning to Reliance Home Finance? Go on, sir.
See, Prashant, I agree with you, because if you really see, first take the little background. I think there is too much hype having created on this Reliance Home Finance, which is yet to get listed. Come on the Reliance Capital from which it has got hyped off. Reliance Capital has never ruled above 1.4 times price to book, when all other finance NBFCs were ruling at 3 and 3.5 and 4. Because even if you take the book value of Reliance Capital, it is at about 600 rupees. And if I just add both the value, it is at 850. Now 750, I take ballpark as a home finance for about 100, 850. That gives you a price to book of 1.3. Now if you really take the home finance performance of the company, 11,000 crore assets under management, I am referring as of March 31st, 2017, liabilities of 10,000. Very small operations, and that too, if you really see, home finance constitutes only 30%. You can just give the loan against property to corporates, to the builders and all that, which will never get discounted by the market very well. Come on the comparable peers, the Dewan Housing is ruling at a price to book of 1.8, even at the high price. Probably Dewan Housing is ruling at its highest with an expected EPS of about 35 rupees for FY18. Indiabull Housing, which has really shot up in this last 6 months, even today now is ruling at a price to book of 3.5. And mind it, Indiabull Housing has a loan portfolio of 1 lakh crore. Dewan Housing has a loan portfolio of about 90,000 crore. Come on, LIC Housing again ruling at 2.6 time price to book, and the loan portfolio of about 1,65,000 crore. So if you talk of a 13,000, 14,000 crore of AUM for Reliance Home Finance, and just go on extrapolating the numbers with 30% CAGR, seen for next 3 years on the management commentary, I think the same norms has to get applied for this. And the quality of the books, as I've said, take the case of Indiabull Housing Finance. If you really ask me, probably they have the best book, because they are all penetrated in the retail space with a ticket size of about 25 lakh rupees per this one. So I think a lot of exuberance. In fact, I sometimes, or in fact, I've been cautioning on Aditya Birla Capital also the kind of exuberance which has been created. Now here, Varinder has given up, has shown on the plate with price to book starting with 3x. For Reliance Home Finance, I don't understand why you did not have a plate of 1x, 2x, 3x and 4x. You are increasing, you are raising the bar by showing the base case as 3x price to book, 4x price to book, 5x price to book, 6x price to book. Because if you really see the quality, now come on the vertical hiving off. All the NBFCs are having these kind of things, these kind of business model. Even the microfinance and the gold loan finance companies have started moving into the home finance. You can't keep on, hiving off all the verticals, that is insurance, home finance, consumer finance, durable finance, microfinance. Everyone is, it's a bouquet in an NBFC carries in its total bouquet. Now, Aditya Birla Capital is not going to hive off all these things. Now, in fact, I've said that on the day of this Aditya Birla Capital, that it will hit a lower circuit, maybe for next 2 or 3 days till Wednesday and Thursday. I will probably be taking a right valuation call at about 200 rupees. You can't give a valuation of a tiny company, which has a 13,000 crore AUM, and the parent of which has never enjoyed as a price to book multiple of more than 1.4, 1.5, when all the other NBFCs have been, enjoying a price to book multiple of 3x, 4x, 5x, and sometimes, people loosely get confused that, they are in fact the equity base, the 500 crore equity base of Reliance Home Finance. If you take the equity base of the Dewan Housing 314 crore, India Bull Housing 85 crore, LIC Housing 100 crore. I don't understand how the servicing will all happen, So lower, there will be very meager kind of EPS being shown, maybe book value of about 25 or 28 or 30 rupees for Reliance Home Finance as of today. You just can't attribute a price to book of more than 2 at this stage.
Sure.
So probably market is right in taking a valuation call that it is expected to list at around maybe 60, 70 rupees, but there is futile in speculating on the expected listing price of Reliance Home Finance. Allow that company to get listed, which will happen maybe 3 weeks down the line, or 4 weeks down the line, or 2 weeks down the line. But I'm not convinced at all with the valuations of a price to book of 3x, 4x, 5x, which has all been shown by the media.
Today, this morning, Marinder, we had the management of Reliance Home Finance with us, and I heard them say, and there was a specific question in terms of, I think you asked the question about 50% growth, right? 50% CAGR growth.
Because they are believing that they say that they will do assets under management to 50,000 crores by 2020, which was an unbelievable
So
number.
50% CAGR,
Yes.
and I think their response was interesting. They said that, well, the industry is growing at 30, so they only have to do 20. I mean, but it's a bull market for NBFCs. Ekta, go on.
Yes, absolutely. I just wanted to actually pose that question to Sanjeev Bhasin as well, who's joining into this conversation. Sanjeev, I'm going to open it across NBFCs for you. Which one do you think is most fairly valued, and what is a very high value scenario in any case?
Well, most of them are very highly valued, but that's been the case, for the last 2 years. NBFCs have been ruling the roost, and at a time when bond yields are touching 6-7 year lows, I think they are showing definitely showing a lot of growth on the numbers. However, I think the business itself is getting very incompetitive, and margins are getting lesser because banks, boutique firms, microfinance, everyone is in the same gamut of retail lending and so on. So of course Bajaj Finance has been one of the better players in the retail side, but we have been having an overweight on HDFC, LIC, and in the mid cap we like Group Finance a lot. Now there is talk of Reliance Finance, Home Finance listing, and I think that will be the speculative part. But coming to Reliance Capital, I think it's the first time it's actually getting a premium valuation, like Mr. Tulsian said, on the back that mutual fund is the cash cow, and that is doing exceedingly well. So yes, markets can give higher multiples to stock sectors which have been underperformers, and rightly so, because of the mutual fund industry being in such a, I think it's the best time the industry's had ever since it's got formed.
Okay. All right. Well, in fact, we did speak to the management of Reliance Home Finance earlier in the morning. So let's quickly listen in to what they had to say, and then we're going to quiz our guests on some other stocks as well.
We've already conveyed the record date to be the 6th of September, and the listing would be anywhere between 15 and 20 days after that. After the infusion of funds, the net worth would go to close to around 1,500 crores. We have always said that the NIMs were upwards of 3.5%, but that was only for the Q1 of this year. Otherwise, our guidance of NIMs has been very clear. We've been saying that we would be maintaining our NIMs in the region of 3.5% as we grow our book further. Guidance on the ROA would be anywhere upwards of 1.6%.
Okay, well, that's a 360-degree view, which is really coming on Reliance Capital. For the markets, we're just about holding at 99.60 odds. So, yeah, we're stable at that level. And the mid-cap index, too, is at the high point of the day. We'll do one thing. We'll take a break as of now. But before that, let's apprise you of our closing bell money control question of the day. Will markets use geopolitics as a driver and an excuse to continue to sell off? Log on to moneycontrol.com and post your responses there. We'll read out some of the most interesting ones at 3:30 p.m.
Okay, it's time for our first break here on Closing Bell. We will be back with our Newsmaker segment on the other side. Stay tuned to find out why telecom is essentially making news on the markets today. Back in 2.
Let's get in Sandeep Wagle, who joins in to talk about what he is strategizing at this hour. And before that, there was some news on Force Motors. It just went by. That'll come back for you. Sandeep, over to you. Afternoon. Nifty at 9957, high point of the day. What is your index as well as your stock-specific call?
Afternoon. I would go with a buy strategy. I think we will go beyond 10,000 and I would be bullish. The Nifty has made a bottom in the short term. Stock specific, I would go with a buy in a L&T Finance Holding. Stop loss of 199, target of 212. And a buy in a Ramco Cement. Stop loss 711, target 774.
Okay, Sandeep, we will touch base soon again. Thanks very much for that quick call. Let's move on to our Newsmaker segment, and clearly the segment focuses on the telecom sector. Enough and more news flow over the last one and a half odd years or so. Unfortunately, not very much positive, and I don't think the latest in terms of news flow can be characterized as positive as well. This relates to IUC or MTR, mobile termination rates, on which there's been a fair bit of debate. We are picking up news flow in terms of what or the quantum by which IUC or MTR may be cut. Kritika is here with this exclusive. Kritika.
So, Prashant, current is 14 paise per minute, as you know. We understand we were anticipating 10 to 11, and even then the industry had prepared for a significant impact. We now understand that to begin with, a cut of about 50%, so a cut to 7 to 8 paise per minute is likely. So that is going to be the immediate cut. Over a period of 1 to 2 years, a roadmap is going to be drawn out by the TRAI to gradually phase it out and get to a zero IUC regime. The Telecom Commission has already had a consultation with the TRAI and is of the view that they should in time come to a zero IUC regime completely.
Okay, let's dig a little deeper, right, for our viewers. Now, what is, and let's quickly put these graphics up. What is this entire issue about? We are talking about MTR. I mean, by the way, these sort of acronyms, MTR, jargon, IUC, I mean, they essentially refer to the same thing. I mean, technically, it's referred to as mobile termination rate. This is essentially the regulated permanent charge which the call originating sort of telecom player pays to the call termination player. So, for example, if there's a call made from Jio to any of the other networks, Jio will pay for the use of their network, for, say, for example, Bharti's network. So, the payment will go from where the call is originating to where the call is ending. Now, how has this rate really progressed? I mean, if you can have the table up. In the year 2003, this was essentially about 50 paise a minute. From 50 paise, via cuts in 2004, 2009, and the last one in 2015, it now stands at 14 paise. 50 paise is where it started. We're at about 14 paise now. Now, what is essentially the issue? The issue is that Jio is offering free services, is offering aggressive pricing, which means, and it's a new player, and the scale is vast, which means that it is essentially, it's got lots of people calling from its network to, networks of incumbents. I mean, who have a much wider footprint, rural, urban, etc., which have a much wider footprint. So, and this is essentially what incumbent telecom players have been saying, that the flow of traffic, mobile traffic, is asymmetric, which means it's not balanced. It's originating, vastly more on Jio's network and ending on incumbent network, which means that under the current regime of 14 paise per minute, Jio was paying to incumbents, Bharti, etc. Now, both players want, I mean, that is incumbents and Jio, want diametrically opposite rates in this particular issue. Incumbents have been saying, like Bharti have been saying, that 14 paise is too low. You need to make it to 25, 30 paise. Jio is saying, well, 14 paise doesn't make any sense. We should move to a zero regime, which is also referred to as bill and keep. I mean, zero essentially refers to bill and keep. So that is essentially the diametrically opposite viewpoint here. Now, if, as Kritika is pointing out, our exclusive suggests that we are essentially moving to from 14 paise to 7 paise, we are saying that there's a 50% cut. This 50% cut on the first level impact is essentially going to be a transfer of all the revenue that incumbents were making straight away to, I mean, theoretically speaking, to Jio. I mean, to the new player, which is Jio, right? That's the first level impact. And on this first level impact, Kotak has these estimates. I mean, they're on your screen. A 50% cut in MTR would mean that Bharti's EBITDA gets impacted by about between 5 and 5.5%. Ideas gets impacted by between 8 and 9%. The impact on Idea is more. But that's just the first level impact. The second level impact could be that what is a player like Jio, which stands to save 50% of what it was paying to incumbents, decide to do with this saving? Will it decide to extend aggressive pricing, low priced offers? I mean, that is a second level impact, which we cannot estimate at this point. This estimate, the first level impact can be put in numbers, but the second level impact will depend on what, a player like Jio decides to do with this particular saving. So, I mean, that's basically the entire issue here. I think stocks have recovered. If you look at the intraday of Bharti and Idea, Bharti was down for some 4.5%. It's recovered a little bit. But I think in the morning there was expectation that 14 will become straight away 0. That is not the case. 14 is becoming 7. So, I mean, stocks have recovered. But it's still in no way positive. Mr. S.P. Tulsian is still with us. So let's bring him in. Mr. Tulsian, how do you look at this issue?
See, I think, Prashant, this will really be a big blow for the existing or the incumbent telecom players, because if they don't get this IUC, that will be seen a big blow at the kind of aggression which we have been seeing on part of Reliance Jio. And we have been seeing the existing players all unanimously opposing that, because if you really see, this is seen to be the trend of the industry, which was expected to, or which should happen in this way. This will be very user friendly, but this will be giving a big blow to the existing player and huge advantage to Reliance Jio, because if you really see the aggression, already about 100 million customers of Reliance Jio and the kind of voice-free services being offered by Reliance Jio, which they've reaffirmed many times, is going to continue. So they will be easily having the customer base of 250 million customers, maybe in next 12 months or so, or 18 months or so, and that will really be a big blow to the existing telecom players.
Yes, absolutely. In fact, Bharti Airtel has not seen any sort of respite. A bit of an intraday recovery, but nonetheless still down around 2%. Even the Q1 numbers were nothing to write home about. Profit of around 500 odd crores. An Idea, we know all of us know what's happening with that
stocks
one.
are starting to slip again, Ekta.
Yes, absolutely. Idea, in fact, at the low point of the day. But I think we can take up our Twitter queries now. First up is long-time investor Lalita, who's bought 500 shares of Glenmark Pharma at an average price of 650. Should she hold, add or sell? Ashwini, this one is for you. What would you recommend to Lalita on Glenmark?
See, every day there are questions on pharma. Why are people stuck with it? If something isn't going up, pharma or anything else, get out. So, pharma, particularly Glenmark Pharma, if it breaks 600, it will have another round of sell-off. So my advice is exit. You want to buy a stock, go buy L&T Finance and Holding. It's had a fresh breakout. Go buy Titan. Things which are making new highs. Something which is making new 52-week lows is an exit period, no matter what kind of value you are getting.
Okay, we have another one. Srinivas wants to know if he can buy Aditya Birla Capital. And also he wants a comparison between that and Bajaj Finance. I mean, he wants to know whether it's another Bajaj Finance in the making. Mr. Tulsian, you want to take this?
See, Prashant, just now I've said that Aditya Birla Capital probably will hit lower circuit for the next couple of days. Allow this stock to correct anywhere around maybe 200 rupees ballpark, or review this again on Thursday. And just in fact, while analyzing Reliance Home Finance, I have cautioned that we should stop loosely comparing this, maybe Aditya Birla Capital with Bajaj Finance. Bajaj Finance is Bajaj Finance, and you can't compare this. Even if I take the valuation parameter, 1 lakh crore of Bajaj Finance and about maybe 40,000 crore of AB Capital, or maybe 45,000 crore, at which it will settle. If you really take a call, Bajaj Finance, the kind of growth they are posting is going to continue for next 3 years. And I'm keeping extremely positive view. In fact, during demonetization, we have strongly recommended as a screaming buy at 800 rupees. So there is no point, or it's futile to compare whether Aditya Birla Capital is seen as a Bajaj Finance in the making or not. Both have its own strength. Look to buy the stock, review at around 200 rupees, maybe 180 to 200 rupees seem to be the realistic value for Aditya Birla Capital.
Okay, fair enough. That point is taken. We've discussed all of these stocks quite in detail. But another query for Ashwini now. CM Ghoshal wants to know if this is the right time for exiting from future retail holdings. He's bought 100 shares at 504. Ashwini, over to you on this one.
See, I'm assuming that he has a short-term type horizon, and that way it's had a a big run, 8 to 10 continuous sessions, and from 500 it's basically been a non-stop run to 580. So that way it's a exit, and possibly if it corrects back towards 490, 500, you could re-enter again. But if it's a longer-term thing and he bought it at 300 and now it's at 580, then you can clearly hold on, because anything that's at new highs can keep going further. And we've seen DMart, etc. Retail stocks, given that festival season is up ahead, chances are will continue to do better.
Okay, we have another that he is holding 6,200 shares of Hindustan Copper, bought at 49 rupees. When a long-term investor, what's your advice, Mr. Tulsian?
Prashant, actually the non-ferrous metals are doing extremely well, and actually it reminds me of the Hindustan Zinc. Hindustan Copper is a PSU, maybe prior to 2002 this divestment by the same government, NDA government, I'm talking NDA government. At that time, Hindustan Zinc used to rule at 14 rupees, and today the effective price is, if you include the dividend and all that, it's 3,500 rupees per share. So what my point is that Hindustan Copper is a very pricey asset, but I don't know why, because this is the only copper company which makes copper from ore to finished product. Because if you see Vedanta and Hindalco, they are only the converter. They only earn TCRC. They don't earn from the ore. So it's a very pricey asset, but I am unable to understand why the company is not able to perform and what's the problem. So I advise him that to remain invested because of the huge uptrend seen in the non-ferrous metal prices, whether you talk of aluminium, you talk of copper, you talk of zinc, they are all virtually ruling at the 7 to 8 years high, and things are going to remain positive. So my advice is to remain invested in Hindustan Copper at this point of time.
Okay, fair enough. Sanjeev, wanted your thoughts on whether you've seen all this drama on Kwality play out, with the stock correcting, the management clarifying to us, then the stock reversing all of its losses. It's up 6.5%.
Well, we have not recommended this stock. In this space, we like Hudson Agro, and we've been bullish on that all the way from 450 level. We still think that could see another 20% upside in the dairy, in the dairy milk and that category. So Kwality has been a new listing, but like you said, there are a lot of corporate governance issues, in the sense, a lot of rhetoric which goes around on pledge shares, and also, so for us that's an avoid. Hudson Agro is our topic in that segment, and we would say any decline would be a good opportunity to buy.
Okay, fair enough, Sanjeev. We're going to let you go on that note as well. Thanks very much for joining in this afternoon and taking us through all of your fundamental picks. But talking about Kwality, I just alluded to the fact that the management came on the channel, clarified, and told us that there is no real reason or real bad news which has taken place for the correction that we saw. So they did allay fears, and that's the reason why you saw that reversal take place as well. Let's listen in to what they had to say.
I think stock movement is important, but more than that, what is important is what are the underlying reasons behind that. Is it a normal transactional reason, or is it something strategically significant? So let me confirm to you that there is nothing strategically significant which has led to this particular decline. Over the last 4 to 6 quarters, our numbers have been pretty good. Business performance has been very decent. Company is strategically moving towards transforming itself to a very strong B2C organization. Let me tell you, this is all malicious communication which is happening, and we are investigating this particular thing, and we'll take very serious action against whosoever will come out as the person behind this. So let me assure you, company is going to take very strong action.
Okay, so that is the management of Kwality. I just want to quickly, we're going to take a break, but just put out Shankara Building, which is essentially, a recent listing, by the way. I mean, I think listed in the month of April. And the listing happened around 600 rupees or so, a little over 600 rupees or so. Take a look at what's happening on the price.